Of course, you had your third quarter earnings report today. You're watching your stock soar. You're having one of your best days ever, really. If it holds, it'll be at least your best intraday in 4 years, and certainly your best day since you became CEO. What do you think is the biggest contributor to Morgan Stanley's performance at this point in time?
Well, first of all, Sonali, welcome to Morgan Stanley. Thank you for wearing Morgan Stanley blue. We're thrilled to have you here. I think the story of our earnings is one of consistency. Consistency on the top line. This quarter, 15 billion plus, and now all 3 quarters, 15 billion plus. And we've seen balance in the 2 major segments of wealth management and institutional securities, where the profitability is roughly equal. We've got great performance in the 3rd segment, investment management too. And then importantly, if you think about our sequential EPS, 202 in the 1st quarter, 182 in the 2nd quarter, 188 in the 3rd quarter. So I think it's a consistency story more than anything. I'd say the second thing is operating leverage. As you know, we reduced our operating leverage needs by about 300 basis points improvement, such that when you see our returns on tangible, they were 17.5% for the quarter, 18% for the year to date. So it's an operating leverage story too. And then, of course, we're talking about growth. We're talking about growth in wealth and investment management and in the investment bank, not just off this quarter, but in the years to come.
You know, it's interesting because, of course, in wealth, you're already really the largest, of course. But when it comes to investment banking, I remember a year ago, what you told me was that equities, fixed income, and across investment banking, you're focused on being number 1. Now, notwithstanding today's report, you still have a ways to go with the other 2 investment banks when it comes to revenue. How are you closing that gap?
I think that's a great question in the sense that we want to generate real returns and be in front of clients in the investment bank, and you see the share gains. You see that we've done $3 billion in equities for the last couple quarters. By the way, we did that $3 billion with lower VAR. So the $3 billion versus last year's number in the mid-2s in equities was done with roughly the same VAR. So there's an element of the composition of that revenue base is about getting closer to clients. You could feel those metrics, and I think the fact that we were able to navigate what happened in Tokyo, what happened more recently in China without a ton of volatility in the books, able to monetize that with clients in prime brokerage and cash equities and derivatives is important. And then if you look at our fixed income business, it's been stable, really a stable business which has underlying volatility, just it's part of what foreign exchange and rates and credit are. But they've been stable, and I feel like in both those businesses, there's an element of the leaders pulling away from the pack just because it costs a lot to run those businesses every year. If you're going to be connected with the clients, you need to be connected across the entire product suite. But also, Sonali, as you know, you have to be connected around the world. And so we've been spending time in Tokyo. We've been spending time on the continent. We've been spending time in India, making sure that we are connected with clients. And, of course, in Hong Kong, we had an important quarter. So I feel good about the global business. I feel that we now can really lay claim to being one of several global investment banks. You tell me how many you think, but that business can generate real operating leverage. And when the cycle demands it, like it is now, where things are beginning to happen, that we can lean in.